It's the 5th of July. It's really the beginning of trading for the new month of July today. We've had a long holiday weekend in North America. Some people would say that this kind of marks the start of holiday trading until Labor Day in September, which, you know, it's true that summer trading does have a kind of different vibe. And lower liquidity, though, sometimes means we can see pretty impressive squeeze moves. There are two kind of really important events today that I think are going to drive the market. One of them is OPEC meetings if you're trading oil, but the most important for pretty much all markets is going to be the Fed meeting minutes, the FOMC meeting minutes. Quite often they use that to correct the market, and as you know, I think that the market has been overlooking the Fed's really clear signals that they're going to continue to hike rates and looking towards a pivot or a pause. And the pause wasn't a pivot, it just means they skipped a meeting. And so they may, in these minutes, stress that there are going to be more rate hikes, and we'll see how the market takes that. Maybe it's all priced in. We'll see. As you know, summer trading can be quite choppy. We end up with, you know, what look like smaller corrections ending up being bigger corrections quite often. So we need to trade carefully, but I do think that there are some quite exciting setups, and I'm really impressed with how bullish Bitcoin is staying. So we'll take a look at those. Okay, so let's first off, we'll start with stock indexes. I'm just going to take everything off my chart, and you can see here that in terms of momentum, we're getting up there, but we're not overbought yet. We are on the CCI, the furthest we've been from these moving averages for quite some time. You can see in this previous uptrend prior, you know, after the COVID low, that we very rarely, you know, went too far from this 20 moving average without a bit of a pullback. And if I look at where we are in this S&P, if we're going to be bullish and continue higher from here, it is possible that we're starting a bit of a wave forward. So this would be wave 1, 2, and this is wave 3. And I think within this, we're doing a wave 4. So this is 1, 2, 3, and we're in a wave 4. So if I look at and how big and how long this correction will be, I think it's going to be relative to the correction that we made in April, which this is a weekly chart, you know, was 4 to 5 weeks before we continued higher, and so far we've only really been sideways for 3 weeks. So we need to be a little bit careful. However, it could be, you know, sometimes this correction is shorter. I maybe have counted this wrong, and it could be quicker. And so that for now, you know, pullbacks we should be looking for them to continue higher, and potentially this 786. But because this is a wave 4, we could be setting up some more sideways. Short term, let's look at where we are. Short term, a pullback like this to start the month, quite often, you know, before the market opens, is a dip that gets bought. And if I put this most recent swing low to high, here we are at the 236 fib level at 44.67 if in the futures. And if we look at it on the hourly, you can see we've just tagged this level underneath 44.67 in the S&P. I think we will likely continue lower. So our trade is between these levels. If we get locked underneath it, 44.33, that would be 50% of this swing, be our hourly 200 moving average. But that's going to be also important for a few other reasons. So, you know, 50% back, previous swing low, you know, 4-hour 50 daily, you know, 4-hour 50 moving average. If we look at our daily, we're obviously not with that 50% back going to be anywhere near the 20 moving average, but that's going to be my first level today. I think that we look at, and if it gets really leery, in other words, if we see if after the Fed the market doesn't like the minutes, the S&P's favorite fib retrace is 43.96, and that is exactly where the daily 20 moving average is. Also, if this is a bigger ABC correction, let's measure from this high to this low, and we'll put on where that 61.8 is, 44.20. A close underneath 44.20 would confirm this as an ABC bearish reversal and set us up for the lows. So ideal 44.33 is where I'm looking if we continue under 44.67. If we don't, this is, you know, let's make no bones about it on the hourly here. This is our trend support. And we could see a bounce to start the week before we continue lower. So key support, 44.67 with this pullback. And 44.33, the next support, if we continue low. If we see a shallow bounce and then we break this level, the meat in the trade is between these two levels for short-term day trading in the S&P. If we take a look at some of these other markets, here, for example, in the Nasdaq, very similar thing going on, low to high. Here we are exactly on that 236 fib level. Key support 15,265 if we continue underneath this. So we would normally expect this to bounce from here. We are oversold. But if we continue underneath 15,265 and it becomes resistance, we're going to look for 15,122 next. I'm going to put in the 38.2 here as well because that's going to be a wobble bounce level. You should mark it in. So 15,186, 15,122, and I should also put in, because the DAX's favorite fib is a 61.8, we're going to put that one in too, because that ultimately may be where we end up. But I really do think market trend and direction will be decided after the Fed minutes, and they are at 1900 hours UK time. That is 2 p.m. New York time. You know, that is 8 p.m. in Europe, and so that's the time when I think if we see a direction change or some volatility, particularly in the dollar and a few other assets, that's where it's going to come from. In terms of the rest of the week, you know, the Fed minutes, you know, apart from non-farm payrolls on Friday, you know, we have jobs. This is jobs week, so JOLTS job openings tomorrow, and then non-farm payrolls on Friday for the US and also for Canada. So it's that week. And this is key support, 15,265 in the Nasdaq. Most other indexes, I think that we will see similar thing. Although I have to say that when I look at this is the DAX. We've had pretty nasty 3 days of selling in the DAX. If we look at this on the weekly, we can see this isn't really anything to worry about, it is it? We're sideways, holding above our 886 fib level and holding above the weekly 20 moving average. So this is just bullish consolidation, and we're in sideways in our sideways range here in the Nasdaq. If you were to put a gun to my head and say if this is going to continue higher, the DAX's favorite fib is a 61.8. Haven't quite reached it yet. We're sideways at that 50% level. So I wouldn't be surprised if this DAX continues lower. 15,894 would be the level. But because this is a 50%, we may bounce here before we do another swing lower and end up at that 61.8 level. So anytime, you know, 50% is you know, one of those levels where the market will attempt to go. If we get back above these daily moving averages and can hold above them, I think with this 50% retrace, we certainly could be on our way to retest the highs and a bullish start to the week. But yeah, I always prefer in the DAX that 61.8. I just don't know why the market, as a market, it really likes it. Short-term trading in the FTSE. Let's take a look at this 4 hour. Now this had the look of a very much a nasty bear flag on the 4 hour, didn't it? And on the daily, that was a rejection at this daily 50 moving average. Also from this high to this low, it was 50% back. That's where we've got flipped. And continuing lower, you can see there's our 50% in the FTSE UK 100. Now Interesting about that is whenever you reverse at a 50%, we know that our support level is 50% going the other way, which is exactly kind of where we are. I think we might just be underneath it. So potentially, if we're going to see a bounce and maybe a 50% bounce to retest this breakdown, we are at the level where that will happen. If we continue lower, below that 50%, we have broken that 50% retrace pattern, and I would expect a full retrace of the lows in this FTSE and potentially another swing lower down to this equal measured move level. So yeah, it's, you know, we're still sideways in the range. This really is key support. If we continue lower, again, the lows and potentially even lower. So that's what I'm watching for in the FTSE. Let's take a look at the TSX and the Australian Stock Exchange. We'll look at the dollar in a minute. The Toronto Stock Exchange has had a really nice rally, but no doubt about it, we're in this pretty ugly sideways range. If I go high to low here, 20,244, potentially 61.8 level. So, you know, whenever I'm not sure what's going on, especially in this horrible consolidation like this, I put my fibs on the most recent swings and I literally go level to level. We haven't really paused at any. I suppose there was a little bit of a pause here at this 236 fib level. Potentially, are we inside of this bigger swing? Potentially, and this is the 61.8 of that as well. And so, you know, whenever we pause at a 61.8 level, if we have a pullback here, I think it looks really strong. I'm going to look for this 50% to be support, and if we go more than that, underneath 20,083, then it's 20,000 again, and the 200-day moving average. So those are the short-term levels I'm looking at. This has been really impressive rally. We've flipped the daily trend. We should be looking to buy pullbacks for another squeeze higher in the S&P. Okay, let's take a look at this Australian Stock Exchange on the daily. Again, this was a pretty impressive rally, and overnight trading, we've seen a pretty nasty pullback. We're in still summer trading, stuck in the middle of a sideways range. When I'm not sure, I do the bigger fib swings and we go level to level. So here, it looks like we've reversed to the 61.8. So key support is this 50% level, 7,022. Haven't got there yet. So this says to me that there is the potential to come back a little bit lower in this ASX. And short term, that's where the momentum points to. So 7,223 is key support. If we're going to keep going higher, and we're going to do a bigger corrective move and down to that 38.2, 71.86 if we trade underneath 72.23. Flat moving averages, we're in the middle of the range. It's high summer in Europe, it's midwinter in Australia, and this is unfortunately a bit of a tricky range trade. So those are the support levels. I would expect that back to there. I am bullish ultimately. I think, you know, we're in a swing back to the top of this range, but yeah, we could go sideways here for a little bit first before we get trends to resume again. Okay, I'm going to look at some stocks now, and then I will look at the dollar. And first off, let's talk about NVDA. Now here on the monthly, we've had a really nice bullish close in NVIDIA, and as you know, I've got a target all the way up here at 493, or basically 500 new highs, and we're having a little bit of a pullback to start the month. That's normal. In fact, because this is so bullish and so many people want in, pullbacks are going to get bought, so we kind of need to look at where they're going to come back to and see where we're going. Normally, as you know, I think corrections should be 3 waves, and the previous wave 4 is the ideal place. So we can say that the ideal place to buy a pullback in NVIDIA is 380. I haven't drawn that very well. See these lows, top of this gap. So 380. Now, if we measure this a swing lower, would this be it? Yeah, that's the 1270. We might only come back to 386. So still looking for a bigger pullback. What would confirm it? This leg here, this bounce that we've done basically since for the last week. This looks like a three-wave correction. If we look at it on the hourly, you can see what I mean here. Here, we're kind of sideways at this. It's not a perfect textbook equal measured move, but that's where we look like. Now, if we were to go 1, 2, 3, and we go sideways here, and then another leg higher, fifth wave, I would say, gosh, this correction's probably over and on our way up again. But for now, I'm leaning towards this being a B leg bounce. This is a little channel, and one more swing lower, maybe 383, maybe 380 on our pullback here. Now, it's not textbook, is it? Sometimes when you draw channels, you have to fiddle for them to fit in. So that's how I'm looking. So obviously, this is the level where we're likely to bounce. This is the bottom of the channel. This is the previous fib level. This is this previous high here. So 411 could be where we pause, and this would be where we break down after the Fed. This would be our bear flag. So leg lower, ABC, one more push lower in NVIDIA before we can buy again. So be patient, not an ideal place to buy yet. But if we get a fifth wave here, so how would you do it otherwise? If we just go sideways and another high, I would wait for a three-wave correction to buy. What I'm ideally looking for is a three-wave correction to buy NVIDIA, and so that is what I would be looking for. And if it squeezes higher than I expect, I'm still going to be looking for that three-wave correction to buy. Okay, let's take a look at one on the Toronto Stock Exchange, PRD. Let's take a look at that one. Now, I'm pretty bullish oil at the moment. And this, what a lovely move on the monthly chart this has had. So ultimately, when I think we've made a three-wave correction, which this looks like in Predator oil, my target would be, first target would be this 786, which is 1830. But it's summer, and I think that this is potentially one. I'm going to look for 5 waves up for here as well to be bullish. So 1, 2, we've just done wave 3, I think, and then after this, I'm going to look for this to be another swing higher to 1830 at least next, and potentially new highs. So I'm going to take some of these marks away that we don't need anymore. Now on the monthly, so far this is quite a nasty pullback, and it counts therefore as a pullback at a 61.8 fib and this previous high here. Whenever you get a pullback at a 61.8 fib, your key support becomes the 50% level, which is now here at 1270. So on a pullback, that would be ideal. But if we do a bigger summer thing, we could come back to the 38.2, and that level would be interesting because it's 50% back of this big green thrust candle. So far to start the month, pretty bearish, but 1270 is going to be key support. And if we go down to a lower time frame, I'm basically looking for a three-wave correction back to then. We might not come back as far as 1270, but that for me kind of would be the ideal level. And underneath 1270, unfortunately, it's back to this 1040 level. So yeah, 3 waves, and I can't see 3. The problem with this correction is I can't see 3 waves here. Look, from this high I see 1 and a bounce, and so I'm thinking another swing lower. Let's do it quickly here on the hourly. There, 1290 is the equal measured move, and 1270 is the fib support. So between 1270 and 1290, I'm looking for predator oil to pull back to, and if it gets underneath 1265, we're going to go back, unfortunately, down to 1045 in a correction. Now, again, I'm not bearish yet. I would like to see this make a 5th wave. I think that this is a wave 4 correction. So let's see how we go with that one. I'm just going to take a look at a couple more charts that I have been following that are quite interesting. One of them is Tesla. So we had that squeeze higher, didn't we? Here we're kind of sideways at an equal measured move level. And we're kind of sideways at a 61.83282 level as well. I'm going from this low to high. And quite often when you overshoot the 61.8 strongly, you know, this 38.2 going the other way is pretty messy too. It's possible that we still could come back all the way to the middle of this range and these weekly moving averages here in a bigger kind of, and this would be my buy zone in a bigger 3-wave correction. This is the bullish support, and I'm wrong about this being a new upswing if we go below 213. Ideal support is 224 if we do that bigger pullback in Tesla. Now that we've got the exciting news about all the cars out of the way, it's clear that Elon is having a lot of trouble with Twitter. I am really devastated by that. And previously, people have sold Tesla because they expect Elon to sell Twitter shares Elon sells Tesla shares to prop up what's going on Twitter. This is the reasoning behind weakness that we see in Tesla. So, plus there are, people who argue that Tesla cars are overvalued, but so that's where we are. Haven't made a kind of new high. In the pre-market, we're trading underneath. 260 really needs to be support. So if you're long Tesla, this fib level, if it's not going to break and we're not going to come back to the 50% pivot level in the middle here on the daily, then 260 is our uptrend support. Underneath 260, 213 is where we're likely to come back to before we continue higher. It's clearly a very nice uptrend at the moment. Potentially, though, we could count 5 waves here, and we could see that bigger 3-wave correction, and we could end up coming back to the middle of this range in Tesla. Let's take a look at a couple more. One of them is, remember we talked about Grayscale Bitcoin Trust. Now, one of the reasons I like to stay quite bullish about Bitcoin is I like how we have broken above this 236 fib level at 1949 in this Grayscale Trust, and this is the retrace level from this high to this low. Now, if we're going to keep going higher here, we should hold this 236 fib level at 213, because we're going to have a bit of trouble potentially from this weekly 200 moving average, and if we get knocked back here, trend support is going to be 1949. However, is there another way to put these fibs on to give us some better clue? So, when you break above a 236 fib, you kind of really don't want it to be a false breakout, head and shoulders pattern, and you fall back underneath, do you? If we look at it this way, potentially we've got a really nice 886 50% target going on here. If we go from all-time lows to all-time highs in this, it's a little bit clearer. And that says 2242, and then 2926 on the upside would be targets. And if we go, remember, back to our retrace fib levels, so we said 2926 going that way, 2685 would be our next upside target. this way, if as long as we hold above 1944, we have two upside targets, 26.85 and 32.84, but we're gonna have to negotiate this weekly 200 moving average, and you can see that previously we've had a little bit of a fight to get above it. When we got underneath it, for example, after this big correction, which listen, if we take everything away, this doesn't look dissimilar to where we are now, does it? And you can see that when we got back to this weekly 200 moving average before, we went 1, 2, 3, 4, 5 weeks before we could break above it and have a really amazing uptrend. So I wouldn't be surprised here if we see a little bit of a pause, and at this 21.49 level and above it, lots of lovely upside and potentially a good leading indicator for Bitcoin in GBTC. The other one that is at resistance, so we talked about Coinbase. One of the reasons that Coinbase has been phenomenal this year, when we think that the price at the start of the year was 33 and now we're 80, more than doubled and back at the highs. The reason for the really strong bullish movement to the upside in Coinbase has been that the CBOE application for an ETF was told that they had all of these applications for ETFs have been knocked back because they have not specified which exchange or who would have custody of the Bitcoin. However, the CBOE application for an ETF names Coinbase as the custodian, which has been very bullish for Coinbase. CBOE are a really highly reputable firm in Chicago markets, so that was the reason. Now, when we looked at this ABC pattern, so we went 1, 2, 3 ABC in Coinbase, our first target was back to the top of this range, a third touch here, which we've got, third touch false breakout. Also, if I measure from this low to this high, project it from the bottom of the ABC made, our first target was this 61.8 level at 81.09. If Coinbase can close and hold above 81.09, and the next upside target is 102, and then 137 and so on. This therefore means that Coinbase has reached tough, important resistance, and we really do need that close above 81.09, and potentially after 1, 2, 3, 4, 5 waves up, we could see a 3-wave correction here in Coinbase, which brings us back to 67 before we continue higher again. So watch out for that. If you've been long Coinbase, a bearish reversal here, or this level, will be the first place to take some profit and buy some back on a pullback. You can see in the pre-market we are pretty down in Coinbase at 78.21. So 81.09. I mean, I really do like the look of this pattern. It's just, this is one of those levels where we will see a pullback before we continue higher in Coinbase. Okay, I'm going to talk about gold and silver. Gold, I've been looking for gold to have a bit of a bottom and a bounce here. The problem for me with gold is we got underneath the weekly 20 moving average, which previously has been pretty good support and resistance. So I like the bullish candlestick that we had last week at this 38.2 fib level. But we're not going up unless we can get back above this weekly 20 moving average or this weekly 236 fib level from the highs, which is at 1937. That's our bullish reversal confirmation level. Now, so far, pretty nice sideways. And again, lovely bullish cross of the 4-hour moving averages. The hourly moving averages looks really good, doesn't it? Holding above the hourly 200 moving average. But 1937, so one more leg higher, and we'll see what happens at 1937. If you're already long, you're anticipating that, and this sideways consolidation should break to the upside. But otherwise, when we look at it on a daily, you can see still in a downtrend and potentially still headed back to the 50% retrace and the 200-day moving average at 1851. and if we cannot get above 1937. So that's the key confirmation level in gold. Silver, we've seen a really nice rally in silver. There's been huge industrial demand for silver, mainly for solar panels, stuck sideways in a sideways range, and I don't know which way this is going to break out. I lean to wanting to be bullish because of the 200-day moving average, but this price action, to be honest, is quite bearish. There's potentially a little bit of a double top here, you know. So I'm being quite cautious. Potentially this was 1, 2, 3, 4, and we're still going to see one more swing lower in silver before this is done, which would make a bigger ABC. If we do that, the target is the equal measured move level here. So underneath 22.38, which is our 61.8 level, our target is 21 in silver. If we struggle, if we break higher, make new highs, we've made a very nice three-wave correction lower and looking for new highs and this to continue. And I love how we're bouncing from the 200 moving average. I don't know which way this is going to go. This is pretty typical summer stuck. You can see this was summer 22, pretty nasty sideways in silver. Hopefully this time, last summer we were underneath all of these moving averages and we went sideways, then continued the downtrend. This time we're holding above the 200 moving average. If we can continue to do that, hopefully this should resolve the other way this summer. That's what I'm looking for in gold and silver. And let's talk about the dollar, because as you know, I'm still quite bullish the dollar. I still think that we have the potential for another leg higher. So this is 1, 2, 3, but we are stuck at the moment. Let's talk about where we are ahead of the Fed. This would be pretty normal as well. If we look at daily candlesticks, for example, this 50% back of this green candle and the daily 50 moving average are holding as pretty key support. So this 50% level here is the bottom of our sideways range that we've been in for, this is the 5th day. And short term, see these three, this is actually a bearish move with these candlesticks, because the most recent candlestick in play is this horrible bearish engulfing candle. And unless we can close more than 50% up of this bearish engulfing candle, we are still looking for another swing lower. So 1, 2, 3 up, 1, 2, 3 down. I don't know which way we're going to break out of this range. Maybe the Fed are a little bit more dovish than people expecting. They ease back on the rate hike pedal and the dollar heads lower. The Fed minutes, I just want to warn you, the Fed minutes can be more volatile. You know, you wouldn't think that the Fed minutes can be that volatile, but they could be. So even in summer, so we need to be a little bit careful for that. Yeah, that's just really flat. These are 4-hour moving averages, completely flat. Our daily, look, 20 and 50, same price, completely flat, going sideways. Let's take a look at the euro, because the euro, for me, is a better indicator. Now, if I zoom out on the euro, it's a monthly chart. You can see from the 2000 low to the high that we made in 2008 credit crunch, these fib levels have been pretty important, particularly this 50% in the middle. Here we are bouncing from a 786, which is the euro's favorite fib level. It's also quite an interesting bottom of the channel potentially. And when you reverse to the 786 fib, your target and resistance is the 61.8, which is here. And that's also where the monthly 50 moving average is. So this is where I'm kind of looking 112.12. That's the upside target. And obviously then we've got a bullish reversal if we get above that. If we go down to the weekly, we can see at 112.12. That's also where our weekly 200 moving average is. So if the euro does one more push higher to this level, that means the dollar does one more push lower. as well. So let's be prepared for that. At the moment, if we take a look at short term where we are on the daily, we're holding above our daily moving averages. And if we put our fibs on from this most recent high to low, that's from April to the low that we made at the end of May, you can see that we've kind of messily done a 786 and we're sideways. 786 and we're sideways at the 50%, but really our first target should be one more push lower, and one more push lower in the euro, which means one more push higher in the dollar, means down to 1.08 before we can look potentially at going higher. And not only that, but if we break underneath 1.08, this is potentially a bigger 1, 2, 3. And because this looks like an irregular flat correction, I have to say that I lean towards that. So if I was going to plot a summer path for the euro, I would say down back to this 50% and potentially, you know, something, actually we're going to do something like this. We'd bounce from these previous lows, and I think we would do a fifth wave, and then that would be time to buy the euro for higher. So now I could be wrong, and clearly holding above these daily moving averages and not breaking this 50% level would be pretty bullish. We could just keep going higher from here, and I'm wrong. Okay to be wrong. It's very hard to predict, you know, when you've got this horrible tricky sideways range. And if I look shorter term here, let's see where we are at. Potentially in the euro, this could be support, because this could be one, and then textbook 3-wave pullback, and then we see a third wave higher here before we go lower again. So no trade really in the euro. I think we could have one coming up. I think if we could see a breakdown underneath 1.086, we have a really nice short trade. Yeah, down to 1.08 at least. And then from this equal measured move level, we have a really nice better long, because then we've gone ABC textbook fib pattern, and then we have a really nice long. So that's what I'm looking for in the euro dollar. Let's talk about Bitcoin futures. So we're at a pretty important support and resistance level. I think I've said many times before, I'm looking at the futures because they're very technical. They work. I'm going to put my fibs on this swing from low to high, and you can see key support 30,000. 3160 is the 236 fib level. This is also this previous wave 4 here and wave 4 here. So if we get back underneath 30,160, we're going to do a bigger pullback. This is our ideal place to be looking to buy. This is still really nice bullish consolidation, but if we get underneath here, then the target is 28,200, 28,400, around there. Now, why is it this level? Let me tidy up the chart. Let's go to the weekly. Now, big picture on the weekly in Bitcoin futures, from the all-time lows 2018 to the highs in 2021, we're bouncing from this 61.8 level, and this 61.8, which we will be back testing, is there right at that level, 28,420. It's also this swing high here, highs and lows, lots of support and resistance. On the monthly, so back towards our monthly 20 moving average, and on the daily, yeah, it's back into these daily moving averages. Now, that's going to be key support, because if my reason for thinking this is if this is 1, 2, 3, 4, 5 and a 3-wave correction, this is the wave 1 of the new big strong upswing, and then 50% back of that kind of would be ideal support, wouldn't it? 50 or 61.8 back to this daily 50 moving average. But if I'm wrong, and this is our first swing higher, and we're going to do a summer bigger ABC like we're seeing in the dollar. So this is a bigger flat correction. and we kiss this 200-day before we go up again, then back below 28,420 would be the signal that for me is happening. So I'm going to put my Heikin-Ashi on because they're such a good trend indicator. I have sold at this level, these previous highs. I sold half of my Bitcoin position. If this turns into, after the Fed, if this turns into a breakdown and a red Heikin-Ashi, I'll probably sell the rest and put my order here. That's how I'm going to be trading this. I am not going to sell all of it. Probably I would probably sell just a bit more, because my goal, with this next Bitcoin rally is to maximize what I can turn it into by selling peaks and buying pullbacks. That's how you increase your position. So now I would not actively short here. This is a very strong uptrend in Bitcoin, and this is still bullish consolidation. So I'm only selling so that I can buy it back lower. I'm not selling because I'm shorting this market. Just make sure that's understood. There are some altcoins that I think are worthy of shorting, but Bitcoin is not one of them. Okay, I will be back with a separate video on altcoins later, and let me know if there's anything you're looking at that you would like me to cover.